Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. We start a new trading month with a focus on the U.S. economy and any growth that may be there. Data this week centers on the August jobs report that comes out near the end of the week as far as a key indicator to economic growth. But what does it mean to the market and taper talk? We're going to see if we can't find out from our research director, Shiraz Mian, our ETF research director, Nina Mishra, and stock strategist, Brian Bolin. So here's what's going on, to put it in a nutshell. The GDP report that we got last week, that was the last before the next Fed meeting in September. The jobs report coming out this week, again, the last before the Fed meeting. So this and all of the other economic data that we got out in the last week or so, is this providing a lot of key elements for the Fed to use in their decision on the taper timeline for us?
My sense, Terry, is that they have decided that they have to taper. My sense is that Bernanke wants to start the process on his watch, and don't want to leave this decision or this question to his successor, whoever he or even she that may be. So the economic data in that context has to prove that the economy was deteriorating or the pace was weakening to stop the Fed from going that route, and we're not seeing that. So the reports that you mentioned, the GDP, and even this morning, the ISM manufacturing, they have all been either better than expected or in line. Granted, there have been a few on the weak side too. The durable goods was weak, new home sales were a bit weak. But overall, the tone of reports is neutral to positive, meaning that the Fed has no reason to rethink what my initial assumption was, that they have decided that they have to taper.
Sooner rather than later.
Sooner rather than later.
Barring any material economic deterioration.
That's right. So the data dependence that the Fed has been talking about all along, from my perspective, pertains to if the economy continues to move along the trend line that we have been seeing over the last few quarters, and it continues to improve, then they want to move beyond the QE question.
All right. Brian says we're not going to get taper till maybe November.
Right. And I think, Shiraz is right. There's been a lot of positive economic news lately. You know, the PMI today, construction spending today, all very good. GDP, very good.
That's right.
But the thing that the Fed really focused on, one of their major components in the decision to end taper, would be the unemployment rate. Now, we would need to add 1.5 million jobs in the month of August.
Right.
And have the participation rate remain constant to get to that level, that 6.5% of unemployment.
Yeah, you've been saying that right along.
Yeah, and the 200,000 has been kind of like the top end of new jobs added. So basically you're saying you're going to have 7 times the normal improvement all inside of the month of August. When it's clear, that's just not going to happen. We've had Cisco lay off 4,000 people. IBM furloughed server people, so when tech is letting go of people and, in front of the all-important third and fourth quarter back into the year, that's going to give a lot of people pause, and especially, when that investment isn't going into places where you want to see that investment, there could be other places where people start holding back, where that jobs number may not be like the greatest thing. Obviously I'm not looking for 1.5 million. I don't think anyone is. But I don't even know that we're going to make that 200,000. And when you have a weak jobs number along with good economic data, then I think the Fed has to hold back on that taper idea.
Okay, so that's why you say later rather than sooner.
A quick comment. The number of jobs that Brian rightly pointed to, we wouldn't get that by November either. Those benchmarks needed to be achieved before the Fed starts changing its forward guidance for short-term interest rates. The taper, you're still buying bonds, you're just buying fewer of them. So from my perspective, what even the Bernanke has been saying, the economic data has been good enough that they could contemplate questions like that.
Right.
And that's where we stand.
So let me ask this, Nina, everybody seems to believe it's a foregone conclusion. There will be some sort of tapering sometime this year. But can there be a case made, we've never really talked about this, can there be a case made against Fed tapering this year?
Yeah, definitely. I agree with Shiraz that if they look only at economic data, then there is a case for tapering sooner than later. But I think they'll be looking at a number of other factors too. And I think most important factor is housing. Interest rates have really gone up, like 10-year yields have gone up from, say, about 1.6% to almost 2.95% a few weeks back. And that's a big move in a matter of 2-3 months. And mortgage rates have gone up by almost 100 basis points for a 30-year mortgage. And that translates into about $200 increase in median monthly repayment for the median U.S. house. And that is beginning to affect the housing recovery. We saw the new home sales plunged. Mortgage refinance activity has come down. So I don't think the Fed would want to stall the nascent housing recovery at this point of time. And there are some other reasons to all the Syria crisis and the debt debate and the looming budget battles. Then emerging market currencies have plunged because of the tapering fears. And in the interest of global financial stability, I think the Fed would not like the crisis to escalate. And last but not the least, inflation is not a concern at all. So there is no urgency for the Fed to do something sooner than later. So that is the case for not doing anything as of now.
Okay, and so any potential involvement that the U.S. might have in the whole Syrian situation, is that going to have any kind of a material impact on this stock rally, Shiraz? You don't think so, huh?
I don't think so, yeah. My sense is that this is the administration and Pentagon is going to great lengths to emphasize the extremely limited nature of what they are trying to do. And if it is along the lines, and there's no reason to think it will not be, if it is along the lines of what the Pentagon is saying, what the administration is saying, then it's a very limited operation. It is in nobody's interest to expand the conflict beyond where it is right now. So if you're not expanding it from Syria and you're not bringing in Lebanon or you're not bringing in Iran into the equation, then there's no reason for outsized anxieties in the market, particularly in the oil front. And that's why it's a non-issue for the rally in the general sense. I think all the points that Nina raised, those are the real questions. So the impact of interest rates on the housing, what's going to happen to debt ceiling, and all this turmoil in the emerging market. But one could, and I would in fact argue that all of those are reasons for the Fed to go ahead and do it sooner than wait for it. This emerging market turmoil, this impact in bond yields and the housing, it will have to happen, whether they do it now or they do it from 6 months from now. So better sooner than later.
Brian, what about the Syria situation's impact on the market?
Yeah, obviously I think it affects the oil prices, number one, and it increases the number of speculators in the price of oil, and all that does is just, push it higher with no real reason or rhyme other than they just feel like it should be worth more money. If there is an attack on Syria, I think the idea of what the market's generally like in times of war, it's we sell off into the idea, and once it starts, we rally. So you want to see the bombs dropping sooner rather than later.
So if anything, just a minor disturbance in the rally, you think?
I think we've already felt the presence of it, and I think, it's already run its course for the most part. I think, the actual oil output out of Syria is
very small.
Like less than 0.5%. So it's really not going to have too much of an angle there. It could be a great, sell the news opportunity where you're selling the oil speculation.
That's right.
Okay, thank you all for that. Don't forget, we have top stock picks from these folks. That's in our next segment, so click on over.